So whatever is happening, we're getting towards the end. We see some of the signs. Inflation is rising again. Interest rates are rising again. We see new entries coming into new investors coming into the market, and they call up their friends and say, I've discovered this new thing called the stock market, and it's fun, and you can make money, and it's easy. It's easy to make money. And so all the signs that the world has seen many times before are happening again. I don't know how much longer this will go on. I'm not selling short, not yet, but I do see worrying signs for the markets and therefore the world economy.
Welcome back to Soar Financially, everybody. I'm your host, Kai Hoffman, the CEO of the Soar Financial Group and the @JR Mining Guy on Twitter. Today, we have a very, very special guest on the program for you. He's a legendary investor. You all know him. I'm not sure if he needs much introduction, but especially in the commodity world, he's really well known. It's Jim Rogers. Again, legendary investor, book author. He has some exceptional insights. He made so many right calls, and I'm extremely honored to have him on the program today. We have lots to discuss, lots of topics to go through, because here on Soar Financially, we try to look at the macro to understand the micro better. And for us, the micro means the commodities, primarily precious metals. And of course, I'm trying to understand why are the miners moving the way they are, right? That's in the end, the essence of what we're trying to achieve here on this program. Before I jump over to my guest as well, be reminded to subscribe to the channel. Only 80% of you are not subscribed that are watching. Let's change that. I'd highly appreciate it so we can bring guests like Jim back on a more regular basis, perhaps, and continue bringing phenomenal guests on this program. Your support is highly appreciated. But now, let me switch over to Mr. Jim Rogers. Jim, it is an extreme honor to have you on the program. Good afternoon to you.
Well, Kai, thanks for that introduction. Because I want to tell you, I make many mistakes, so don't think I know what I'm doing.
Well, you know, your reputation sort of says you made more of the right calls than wrong calls, apparently. Otherwise, we probably wouldn't be chatting, to be honest. And we've got a lot to learn, right? And you're an accomplished author as well. And I'm trying to see what we can learn today from you, because some of the books you've written in 2008, 2009. But I'm looking at the titles; they apply perfectly today as well. So we're going to dive into that. But before we do that, sorry, I just want to start with a bit of a...
No, let's do it. Do it. Go ahead.
Exactly.
Go ahead.
Let's dive right in. I want to start with a bit of an holistic question to kick us off here. And the question is, like, how do you assess the current state of the global economy, Jim? Let's start there.
Well, Guy, as you know, it's been 14 years since we had a serious bear market in the United States, and I'll use the United States since it's the largest market. And that has never happened in American history. We've never had such a long period without serious economic and financial problems. Doesn't mean it's not going to go for 24 years or 44 years, but it never has. So whatever is happening, we're getting towards the end. We see some of the signs. Inflation is rising again. Interest rates are rising again. We see new entries coming into new investors coming into the market, and they call up their friends and say, I've discovered this new thing called the stock market, and it's fun, and you can make money, and it's easy. It's easy to make money. And so all the signs that the world has seen many times before are happening again. I don't know how much longer this will go on. I'm not selling short, not yet. But I do see worrying signs for the markets and therefore the world economy.
What are the biggest worry signs for you? Let's start there, because I have a couple of buzzwords obviously written down here for questions. But out of curiosity, you mentioned inflation. What other worrying signs are you seeing out there?
Well, since we're talking about the markets, the most worrying sign are all the new entries and the developing hysteria which is taking place. These are signs that happen at the top of markets. It's happened many times. If you haven't experienced it, you might have read about it. And that's what's worrying me probably the most, because markets can go up and down and do all sorts of strange things. But eventually, it's the investors who call the tune. And if we have a lot of uneducated or inexperienced, I guess is a better word, inexperienced investors, it worries me.
The banking crisis comes to mind as well because the banks weren't properly hedged for the rising rate during the rate hike cycle right now. Is that a sign that you're seeing there as well? Just the inexperience, or is it just a one person's fault here?
It's never one person's fault. But you're right. The banks, that's just another sign that happens near the end of bull markets. People don't think you can make mistakes. They think that everything is fine now. And they have a fairly long experience without many mistakes or big mistakes. So they think this is normal. They think we always would just make money. All we got to do is just show up and make money. These are all worrying signs, Kai.
By the dip and to the moon comes to mind, especially during the last 2 years, listening the hype and the mania, as you said. There's cinema companies buying into mining companies as well, just to show how crazy things are, right?
I want to just quickly interrupt you and tell you a story back in probably the late 60s when all computer, if you had computer in your name, your stock went through the roof. Well, there was a laundry that changed its name to something computer, and the stock went through the roof. It was nothing more than a laundry, but it had the right name.
History repeats itself. People don't learn from their mistakes, do they? It's always the same scheme. It's AI right now.
One of the main lessons of history is that people don't learn the lessons of history. It's all right there. All you do is read your history and you can see, but people don't learn.
Yeah. Jim, I was saying, I went through YouTube. I always like going through YouTube to see what other interviews you've done, and I noticed that back in October already last year, you've been expecting a recession like so many others. But where is it? Like, what is happening, and why do we have to wait so long? It's probably the most anticipated recession ever because everybody sees it coming, but it's not here yet. Can you explain why that is?
Why is it so well known, and why it hasn't come yet?
Both.
The reason it hasn't come yet is because the central banks keep printing money and governments keep borrowing and spending money. The U.S. government borrows gigantic amounts of money every day. Every day. Look at Tokyo. Oh my gosh, you cannot believe how much they borrow and spend. It's going on around the world. And I'm not suggesting this is good for the world, Kai. I'm not suggesting it's good for you or me or our children. But that's what's happening.
Absolutely. U.S. debt crisis comes to mind. We just lifted the debt ceiling here and already issued $850 billion of new debt just within 3.5 weeks. Where do you see things headed? Eventually, push has to come to shove. Like, where do you see, like, what's going to be the straw that breaks the camel's back when it comes to the U.S. debt crisis?
Oh, you should watch your program to find out the straw that breaks the. I don't know. And it's usually something that something will happen and we will not pay much attention. It'll be a small country or a small industry or something, and not many of us will recognize what's going on. In 2007, Iceland went bankrupt, but nobody cared. Nobody paid attention, of course, until everybody paid attention. It was on the evening news by 2008, and we all knew there was a problem. That's the way it usually works, or historically it works. So I don't know what the final straw will be, but I know that few of us will recognize it as it's happening.
Watching it, like the U.S. has to issue another $1.1 trillion by the year end in new T-bills. I'm always looking for the canary in the coal mine, or like a trigger. Again, I'm German. I always look for the negative instead of the positive, right? But do you see any issue or any risks associated with that? Is the U.S. going to be able to issue those T-bills without problem?
Well, it always has been able to. I mean, if nothing else, the Federal Reserve can just print more money and they'll buy them up. I mean, I'm not suggesting this is good, but that's the way, at the moment anyway, the system still works. And the U.S. can print and spend and borrow and spend. That will someday come to an end, or someday people will be on TV screaming about it, but not yet. But when you see it, Kai, when you see on the evening news that the man in the street is worried about all the government debt and the interest rates are going higher and higher, and the guys are saying, I don't care, I'm not going to borrow any, I'm not going to lend them any more money, then you'll know the crisis is here.
You brought up Japan, and I keep coming back to Japan as well because their debt to GDP ratio is at 260%. The US is roughly half of that at 130%. Do you see Japanese like sort of conditions develop in the US as well? Are we going there? Because
No,
yeah,
the
go ahead.
U.S., you're talking about the publicly visible U.S. debt. There's gigantic amounts of off-balance sheet debt in the U.S., which will surpass, I mean, maybe Japan has a lot of off-balance sheet debt too. But to answer your question, yes, this worries me. I mean, the Bank of Japan, every day the guy goes to work and prints money. He prints more money and prints as fast as he can. He's a good Japanese bureaucrat. He does what he's supposed to. And this is going to lead to many, many problems, not just in Japan, not just in the US, everywhere. Kai, you're in Germany. Even the Germans have problems now. There are German cities that have big debt problems. Germany, my gosh, in my lifetime, that Germany was the paragon of virtue. Not anymore.
No, but we're only at 67% debt to GDP ratio. It actually came down last year, which surprised me tremendously. I think it was at 69 and now we're at 67%, just as a random anecdote. I'm just looking at, I keep coming back to Japan because I'm wondering if it's somewhat of a blueprint of what might be developing in the US. And I'm looking at the currency here as well because the yen is massively devaluing, especially right now. Is there something we can learn from it? Should we watch something similar happen with the US dollar?
Well, you can read in history that it's happened before. The Japanese also have the problem that they have a declining population. I mean, the Japanese birth rate and the population have been declining for many years. The population has been declining since 2010. That's, 13, 14 years now. And that is obviously not good with the debt going through the roof and the population declining. The U.S. still has a rising population, partly because of immigration. Some of it's illegal immigration, but still it's people coming in and increasing the population. But our debt is going, I don't know whose debt's going faster. I don't know if ours is growing faster or if Japan's is growing faster, but they both are. But Kai, as I say, look out the window, even in Germany.
No, absolutely. Jim, I want to take advantage of the fact that you're actually based in Asia, because a lot of the reporting we do here also on the podcast is very US centric, right? And the US, like I watched them, I couldn't find the quote in preparation for this conversation, but I think it was one of the Batman movies or so. The world needs or maybe it was even Captain America saying the world needs a villain or the US needs a villain to unite, right? So we always try to make up a villain. Right now it's Russia and China, right? So of course the stories are very, let's say negative towards China as well. And we always worry that they'll take over the world, they'll push the US off the throne. But in your assessment, since you are in Asia as well, you see different reporting. How do you sort of or not value is the wrong word, assess the China situation?
Well, whether we like it or not, China has been an extremely successful country in the past 30 or 40 years, and it continues to be a successful country. I moved to Asia because I wanted my children to know Asia and to speak Mandarin, because in their lifetime, whether we like it or not, China and Asia is going to be extremely important. China is now the second largest economy in the world. China doesn't have the staggering debt that some countries have. It's getting debt, but nothing like we do. No, I see potential problems. But Kai, America became the most successful country in the 20th century, but my goodness, we had problems along the way. Bankruptcies, depression, civil war. We had everything you could possibly have, and yet we did it. China will too. And that means its neighbors, Vietnam, Korea, look around. Many of those countries will be successful too.
A lot of people are talking about the Chinese yuan, for example, becoming the new world reserve currency. Is China there yet? I think it's a question of timing. I think we can all see it coming, but the question is timing.
Well, the Chinese renminbi, the currency, is not convertible at the moment. It's getting more convertible. Well, until the currency is convertible, I don't see how the renminbi can be the world's medium of exchange, the international currency. Maybe eventually, yes, but not now. I mean, I own renminbi, but it's not convertible. And I don't see any other currency on the horizon that's got the potential, but not yet, Kai. I mean, I cannot imagine the world having an international medium of exchange which is not convertible.
Curious, like August 26th, the BRICS are all meeting, I think, in South Africa. And one guest on the podcast suggested that they might introduce a new currency at the time. Do you have any speculation on that? Because I think that would upset the world order a little bit. And I'm always looking for that, let's say, a trigger to upset things and maybe start the ball rolling towards maybe the recession or financial disaster.
Well, historically, I'm going to call it an artificial currency, for lack of a better word. Artificial currencies have not been successful down the road. I mean, they may work for a while, but I'm a simple peasant, Kai. I want to be able to put it under my bed and hide it away if I need to. And we have not ever in history had an artificial currency that's worked very long. So I wish them luck, but I think they're going to have to do. I mean, if they meet and they say, "Oh, and by the way, China's now got a convertible currency," that would be a big step in the right direction. But I don't see an artificial currency having a major impact.
Interesting. Also, this week, or sorry, it's Monday. It's late last week, Thursday. The EU announced a proposal to introduce a digital euro, their CBDC as well. Just want to talk currencies real quick. Do you see an impact on global currencies by CBDCs? Like, what's your assessment of CBDCs, and how could that sort of figure in?
Well, all currency is going to be computer money. Yeah, I don't know what else to call it. Eventually, every country's working on it. China's already ahead of most countries in making its currency computer money. They love it. Kai, it's much more efficient. It's cheaper. They don't have to print it, transport it, guard it, or anything else. And they know everything you do, Kai. They'll call you up one day and say, "Kai, you've been drinking too much coffee this month. Slow down your consumption of coffee." They love, now, I, of course, hate it. And most sensible human beings would hate the government having that much control and power. But they love, and it's going to happen. I don't like it, but it's going to happen. It's in the process.
It is happening. Absolutely. Unstoppable. Jim, one of your books is called Adventure Capitalist. So it leads to the question, like, how adventurous are you as a capitalist investor right now?
Well, that book, I drove around the world. I've driven around the world twice, as you know, once on a motorcycle and once in a car. And that was about traveling around the world. And when I travel, things like that, if I see something good happening, Kai, I usually stop and do some homework and make an investment because of the nature of who I am. Some people say, "Oh, look at that. That's the Eiffel Tower. Let's go see it." Well, I go see the Eiffel Tower too, but I also, if I see promising investments, I make them. And I guess that's part of the reason it's called Adventure Capitalist. Many people are confused or shocked by some of the places I have invested, but they're good investments everywhere if you're attentive.
Absolutely. Yeah. I think you mentioned Uzbekistan in one of the other interviews you've done recently. And I was a bit, I wouldn't say surprised. It hasn't come up much. So I'm always curious to explore new ideas as well. Do you want to run us through your investment thesis there?
Well, Uzbekistan was one of the Soviet, whatever satellites, and ruined by the Soviets, as everything was ruined by the Soviets. But in the past couple of years, 2 or 3 years, Uzbekistan has a new crowd of people running it. They're starting to run Uzbekistan the way you and I would run a country, or the way we would try to run a country. It's got huge resources, natural and man-made resources. It's in a good location. Got lots of neighbors who can be prosperous and will be prosperous. So they've got a stock market, fledgling, but fledgling stock markets often grow up to be big boys. So I hope that I am start making more investments in Uzbekistan. You'll know in 5 or 10 years.
I had the chance to visit Kazakhstan last September, and sort of reminds me of what you're saying as well. They're making strides, especially on the commodity side as well. It was interesting. Like, all the majors are, for example, in Kazakhstan active. Nobody really knows about it. So interesting times, right?
Well, all those sands have lots of natural resources, especially Kazakhstan, Uzbekistan, they just are sitting on top of a lot of stuff that they didn't know about in many cases, but it's there.
Absolutely. Amazing segue, by the way. I didn't plan it for that, but we have to talk commodities, right? I said it in the intro. Like all your book titles are sort of applicable to today's investment or cycle right now as well. Like your title is "Hot Commodities." How can anyone invest in the world's best market? I think we're just at the start again of another cycle, in my opinion, because copper at 370 these days, I think has a lot of room, for example, to go. Where would you invest right now? Like, how do you assess the commodities situation these days?
Well, as I look around the world, Kai, I see that stocks in most countries either are or have been at an all-time high or near making new highs. Bonds have never been this high in the history of the world. So bonds are certainly a bubble. So what's left? Property, yes, you can invest in property, and in some places it's great, but many property markets, New Zealand, Korea, there are many property bubbles going on around the world. That really only leaves commodities that are cheap. Silver is down 60% from its all-time high. Sugar down more than 60%. So the only asset class that I see where they're really cheap entities are commodities. That doesn't mean you can't lose money if you buy them, but that's the only place I see on a historic basis cheap prices.
How happy are you with the commodity prices right now? And it comes to mind, like gold is only 7% off its all-time high, right? Silver is down 60% though. It's like how happy are you with the current price levels, especially the precious metals?
Well, the markets don't care if I'm happy or unhappy. The markets could care less whether this guy in Singapore thinks about the markets. No, I think I see that some prices are make me happy because they're cheap and I can buy them. Agriculture is cheap, for instance, I think. So there are some prices that are cheap, and that makes me happy because maybe I can make some money investing in them. But I guess U.S. stock prices make me unhappy, to use your words, because there are bubbles developing. Apple goes up every day. That's been a great company. That does not mean it's going to be a great stock forever.
Absolutely. Yeah. One of the first stocks that closed above 3 trillion, not billion or so, trillion in market cap on Friday, I think. So insane. The numbers are staggering, right? I don't know if you subscribe to the theory, but I heard that a lot of the fund managers are just parking their capital in the big 7 S&P stocks because they don't know what else to do these days. And they're looking for other opportunities. Is that something you would put your name under and say, okay, that makes sense?
Doesn't make sense to me. I've seen this movie before. Not the first time I've been to this rodeo. There were back once upon a time, there was in the market, there were the nifty 50. And the wisdom was, if you buy these 50 companies, you don't ever have to worry about the stocks. Just buy them and forget them. You know how that wound up. But this has happened often in history. In the 1920s, Radio Corp of America, my radio was new and it was a gigantic stock. Stock went straight through the roof, always, every week, every day. 1929 came along and ended that story, but this has happened before, Kai. All these young, or I should say not young, but inexperienced investors coming in and talking about how easy it is. It's not the first rodeo.
Well, as you said, many of them haven't even experienced a bear market yet, right? So 13-year bull market, a lot of the new traders, as you said, are completely inexperienced.
Well, yes, but maybe it'll go on another year or two. I don't know. I should watch your program to find out. We all should.
Exactly. No, we're keeping track here. Absolutely. Coming back to commodities real quick, we need to talk copper and maybe the base metals as well. When we talk commodity super cycle, we have to mention it. Like how does the EV transition or going electric sort of factor into the commodity super cycle theory?
Well, you know better than I do, I'm sure, but electric cars, which are coming, electric vehicles, use much more copper than petrol cars or gasoline cars. These are simple facts And so as long as we are moving towards electric cars, which apparently we are, the demand for copper is not going down. And people haven't been opening copper mines recently. Lead mine, they use a lot more lead, they use a lot more lithium, they use a lot more everything. So if the world is going to become electric, which apparently we are, the demand is certainly not going to go away.
Do you have a favorite commodity, Jim?
No, I wish I was smart enough. I mean, I see some silver sitting on my desk, so I'm keen on, but I'm not buying silver today, but I do know it's cheap. I know that I mentioned sugar. I know that some of these things are awfully cheap.
You made an amazing call on soybean just a few weeks ago, and I've only noticed because I've watched it this morning. I saw the mention of it, and but you mentioned around $1,300, and now it's trading at $1,600. I'm not even sure if it's a pound or bushel or whatever it is. Soybean doesn't really matter. Great call, right?
I make many mistakes. When you hear about my first wife, oh my God, what a mistake that was.
Yeah, great. You brought up silver. It brings me one last question about silver as well. Why aren't you buying it today?
The market is not telling me. The market, I hope, will tell me when to buy it, because someday I'm going to see everybody's negative on silver and talk about how it always goes down and blah, blah, blah. If that happens, the market will tell me to buy. But silver is used in solar energy, as you well know, and in many other things. I'm not sure when I will buy or what the catalyst will be. I just hope I'm smart enough to buy it before it skyrockets again.
Fantastic. Jim, sort of to sum up the conversation here, what does your portfolio look like these days? Can you break it down for us a little bit? We all know we shouldn't copy or follow that, but what does your portfolio look like right now?
Well, at the moment, I have a lot of cash, and the cash has been in US dollars, although I'm beginning to think that I got to move out of US dollars, and I don't know where to move it. But so at the moment, either inertia or laziness or whatever it is, it's a lot of cash. I do have Chinese shares, I do have Japanese ETFs, I have a few things, but I do Uzbekistan I've started investing in. I am looking. I don't have a lot of hot ideas. I know I don't. I hope I don't have hot ideas. I'm looking for where to put the money next.
Maybe one last word of advice for investors watching right now. What would you leave us with?
Well, the most important information for any investor is don't listen to the TV, don't listen to the radio or the newspaper. Just invest only in what you yourself know a lot about. Now, and everybody watching this knows a lot about something, whether it's cars or fashion or something. And that's where you become a successful investor. Stay with what you know. But people will tell you, Kai, oh, but that's boring. Be boring. Be boring and invest in what you will see major changes before I will, because you look at it every day. It's your passion. And that's how you become a successful investor. Don't listen to hot tips. A very strong word of advice is, Hi, everybody wants to be rich this week. Me too. But don't listen to hot tips.
Awesome. Jim, I tremendously enjoyed this conversation. Thank you so much for your time. Is there anywhere we can direct our viewers to find more? I know you don't write a blog, you don't have a newsletter, you don't sell anything online.
I got nothing to sell, Kai. I'm sorry, I'm a simple person. I do try to, if people want to interview me, I try to do it, because when I was young, many people helped me out, and I feel a sense of obligation or duty, if you will, but I don't have anything to sell. No? Sorry, I'm boring. See?
Stay boring, be successful. That might be the title for the YouTube video. Stay boring, be successful. Fantastic. Jim, I tremendously enjoyed it. Thank you so much for coming on. And everybody else, thank you so much for tuning into Soar Financially. I tremendously enjoyed the conversation with Jim Rogers. I hope you did as well. If you did, hit that subscribe button. It says right there, it's a square box. It says subscribe on it. It starts with the letter S. I know 80% of you watching are not subscribed. Please subscribe. Help us, engage with us. Hit that like button as well. It helps us bring guests like Jim back on, and just helps us bring in guests on in general. Thank you so much for your time. Thank you so much for watching. We'll be back with more.